Hello and welcome to this week's episode for the Stock Market Update, brought to you by Conservative ETF Investor. I am your host. My name is Ken. Today's date is November 11th, 2017. And here we are on the homepage for Conservative ETF Investor. And once I'm done with this video, I'll download it here so you can click on it here in order to gain access to it, as well as YouTube. And here is our current recommendations. And the most important thing I want to show you is that we are still on a hold posture for all of our positions that we have. And you can learn all about our portfolio if you're new to right here on our portfolio and our current recommendations. Plus, you can click on Portfolio Ideas, the Portfolio Ideas tab, in order to learn about some portfolio ideas and so forth. Going back to current recommendations, again, we are on a hold posture for everything. And let me just put this out of the way. And that's where we stand with all of our positions. Let's go ahead and jump right into the charts now. Okay, so the portfolio since our buy recommendations has gone up 12.83%, not including dividends. And for calendar year 2017 only, the portfolio is up 8.88%, again, not including dividends. Now we're going to jump right into our charts. The first chart that I want to bring to your attention is the S&P 500. We use the charting service of stockcharts.com, and to look at charts, I like to use the weekly time frame, hence the word weekly right there. And these are candlestick charts, and each one of these candlesticks represents 1 week of activity. Because this is a clear candlestick, it opened here at the bottom and it closed here at the top. The red ones indicate that it opened a week here and closed the week here. You can see here in the chart pattern that the S&P 500 symbol SPY ETF has been trading in this upward trading wedge pattern for quite some time, and we are still smack dab right in the middle of it. The S&P 500 had a loss of 0.14% for the week. We use 2 momentum indicators. The first momentum indicator that we use is the MACD, and the one underneath that is the slow stochastics. Both of these are at default settings. The MACD is currently above its signal line, which is bullish, but it is topping and beginning to roll over, which is somewhat of a concern. The slow stochastics is above 80, and it's kind of running parallel with its signal line, bullish activity. And you can see that in the chart as well. I mean, the S&P 500 has been on a complete tear, and it's doing fabulous. Here you can see when the dividends come out and so forth. We've got a little bit of time before our next dividend payment. The current dividend on SPY is 1.85% annualized. Okay, that is our first chart. We have a 40% allocation in SPY. Our next one is VEU. Again, we use a diversified portfolio approach here at Conservative ETF Investor. Let's go down here. Now, the symbol on this next one is VEU. This is the Vanguard All World excluding the United States ETF traded on the New York Stock Exchange. Had a negative week, losing 0.48% for the week. You can see the absolute tear that VEU has been on. As a matter of fact, let's go over to our portfolio, and you can see that VEU has gained a total of 21.54% in our portfolio. Our allocation on VEU is only a 10% allocation. So I mean, it's we don't have just 10%, but this is just been fabulous. Let's go over here and look at the thumbnail. You can see how well it's doing here. We have two moving averages, the 17-week exponential moving average and the 34-week exponential moving average. The red is the fast, the blue is the fast, the red is the slow. You can see that the blue is above the red, keeping a nice distance between the two. The ETF is trading above the fastest moving average and just continually doing that. And it's just extremely strong. MACD is flattening out because the level of rise is just is a consistent rise. The slow stochastics is above 80 and just kind of bouncing around, which has been for quite some time. Okay, I have changed my close because just in case this thing eventually this is going to turn south. So the only thing we don't know is when that's going to happen. And I want to keep our profits as tight as possible. So I increased the sell stop on this to this. You see that tail right there? I put it to just at the bottom end of that tail. So if we get a close below that, then I'm potentially going to see more losses in this ETF, which quite honestly it is due for a pullback. I mean, these little piddly pullbacks are just nothing. Okay, let's move on to our next ETF, which is VNQ. This is our real estate portion of the portfolio. So this is symbol VNQ. This is the Vanguard Real Estate Investment Trust ETF traded on the New York Stock Exchange. Had a wonderful week, gaining 2.21% for the week. Our allocation into real estate is a 15% allocation. This pays a current dividend yield of 4.65% annualized. Now, here you can see that we have been trading in between this upper resistance band and this lower support band for quite some time. Pretty much for all of 2017, we've been in this range. We have just kissed the upper resistance band during this current week. Now you'll see that I had a sell order in here at 85.27. And on my own personal account, I actually executed that trade because if you look at the highs for the week, we had a high of the week of $85.35. And I had a sell order on my account at $85.27 because I trade my account a little bit. I don't just sit passively. The purpose of the website and the purpose of Conservative ETF Investor, going back over here to our homepage, the purpose of this is to just have a very almost like similar to a buy and hold, but also it's actually a buy, hold, and sell strategy here, where we don't really trade the account, we buy and hold, and when things turn south on us, we sell and we purchase at a later date, hopefully at a better price. But this isn't really a trading website here. This is for like as the name implies, it's for a conservative investor. Now, I did put in a sell order there. Oh, and one other thing I want to bring up, another thing that I monitor here, I have an Excel spreadsheet here, and I want to show you what I look at all the positions and see how well they do against their seasonality report. Now, on VNQ, on a seasonality basis for the current month of November, it usually, over the past 10 years, has had a loss during this month of 2.7%. Our current monthly return is 3.32%. The difference between where we are currently sitting and the seasonality average close for the last 10 years has been negative 2.7. The difference between that is approximately 5%. So going back over to our chart of VNQ, if I put on my inspect mode and I take us from the highs that we had, which is right about there, and drop that down and go down about 5%, it takes us to right there, which is exactly where my buy order is placed at. So from a seasonality point of view, from a chart standpoint, from my resistance and support lines, it actually has a good reasonable probability of working out. So that's something I am going to try to take advantage of. Okay, so that is on VNQ. Looking at the thumbnail, you can see here where we came up, had that tail, you can see those tails, and then after those tails, that's when we come down. Momentum indicators, let me just get rid of this inspect mode so you don't see so many lines. Okay, you can see here on the MACD, just bouncing up and down, not breaking out one way or the other. Slow stochastics pretty much between 50 and 80, bouncing in that range. We did just get a bounce right here at 50, so it's possible that me exiting at this point here, maybe it has the strength behind it to get through this resistance line, but because it hasn't done it yet for all of 2017, we're in a rising interest rate and market for a real estate investment trust. I think, and also on a seasonality basis, I think the odds are good that that this will not penetrate that. Okay, we have another chart to look at. This one here is OSTIX. It is not an ETF, but it is a mutual fund because this particular mutual fund does very well, paying 4.63% annualized yield. Let's see here. It had a negative week, losing 0.26%. You can see the red bar. Let me get this over in the thumbnail. You can see the strong red bar there. But we've seen these in the past, and when this softens up, it really doesn't soften up much at all. If we begin to break the blue support line, which is the 17-week EMA, well, then there's an area of concern. But we have not done that. Our MACD is below the signal line, and it looks like it tried to penetrate above it and come down, but it's been doing that and riding that down the whole time this has been riding up. So that's not a good indicator as a sell indicator using that alone. And the slow stochastics is above 80 and just been bouncing around for a long time. Okay, two more charts to look at for today. The first one is the VIX. The VIX, if you remember from previous videos, we changed our chart pattern now. The previous chart pattern was weekly and a 5-year time horizon. For the VIX, we use the daily chart pattern with a 1-year time horizon. The VIX is a volatility indicator for the S&P 500, and it's an inverse indicator. As this goes up, the S&P 500 goes down. Okay, let me get that back there. And here you can see that we've come up over the last 5 trading days. Down here is a chart of the S&P 500. You can see that it's made like a top and beginning to come down because it's an inverse indicator. I use 2 moving averages here, a 50-day EMA and a 200-day EMA. The red is below the blue is below the red, so the fast is below the slow moving average, but the indicator is coming up and traveling up past the fast and the slow indicator. So we'll see if that trend continues. That will pull this 50-day up and begin to cross above that 200-day, which is not going to bode well for the S&P 500. Okay, one more indicator I want to look at, which is the VXN. And I use this just as a guide to help me get an idea of the overall market. The VXN volatility index is for the NASDAQ 100. And again, it's the 1-year time horizon. Each candlestick represents 1 day's action. And so it's a daily chart. And here we've kind of have an asymmetrical triangle pattern that we've been falling in between if we get a breakout one way or the other, would bode well to determine exactly what direction the NASDAQ 100 is going to get in. But also, it's just like the VIX, the VXN is an inverse indicator. As this goes up, QQQ, which I have a chart pattern down here, will come down. So you can see the last week we've gone up in the VIX and we've come down a little bit in the QQQ. So that is all the charts I wanted to show you for today. Again, we are on a, let me just get this out of the way. We are on a hold recommendation. Here is everything. We've got a total dividends on our portfolio since our purchase transaction dates of 2.09%. You can see here our beta is 0.59, which is a nice low conservative beta. It's almost a 50-50 beta. And that is it for everything. I hope you have enjoyed this week's episode. Please click on the thumbs up button that you liked the video. If you have liked it, leave comments and tell friends and subscribe. Thank you so much, and I will see you later.